are about to hear
today's news talk and the voice of freedom.
That's what this country's all about.
Today's news talk, TNT.
Yes, you better believe it. It's Monday, the 29th of April, 2024. I'm joined for the second time here on Locked and Loaded by the one and only Mario Ineco. He runs a YouTube channel, a very informative and wide-reaching YouTube channel, Manco64, and it's the home of alternative economics and contrarian views. He's a background in financial services, markets, and economics. Welcome back to the show this morning, Mario. How you doing?
I'm doing well, and thank you for inviting me, Rick.
It's an absolute pleasure. You know, I'm asking how you're doing. It's in sharp contrast. You said, well, I'm doing okay. It's in sharp contrast to how the world's markets are going and the dollar's going, the yen's going. Everything seems to be taking a kicking at the minute, Mario. I'm looking at your YouTube channel and you've done a lot of videos recently. I'm just going to fire a few discussion points out to you and you can tell us what you think here. There's a video that you posted up 4 days ago. US is doing its best to destroy the dollar's exorbitant privilege. Surely not. Surely not. Surely the US is not trying to nobble its own currency. Surely not.
Well, back in the early 70s, the Secretary of the Treasury told a group of European counterparts at a meeting in Europe that the dollar was the US's currency, but it was Europe's problem, That was the case then, but now it's becoming more of America's problem. And why? Well, because they've abused that exorbitant privilege that they had since the end of World War II of being the major reserve currency. And the reason it was that it was backed by gold. The U.S. had 2/3 of the world's gold reserves, official gold reserves, but it squandered that privilege by going off gold in 1971, by printing and borrowing into the trillions of dollars. And now the other thing it's doing, it's using the United States dollar as a weapon to punish countries that don't follow U.S. policy. And it doesn't look like it's going to change even if Donald Trump is elected. I saw an article from Bloomberg saying that a Trump administration would punish countries that would try to use their own currencies to trade amongst themselves. So it seems like they are trying to get rid of that exorbitant privilege. But then again, politicians don't understand how currencies and money works.
Let's rewind a little bit there. You mentioned that crucial year of 1971 when America went off the gold standard. And you also said that America at that point held approximately 2/3 of the world's gold reserves. Now, if you've been following, anyone out there that's been following the price of gold recently, it's spiking up to all-time highs, and who knows how high that gold price can go. China have been aggressively buying up gold. Many countries have been aggressively buying up gold. Where does the US stand at this point, Mario, given that they held 66% of the world's gold reserves as far back as 1971? Where do they stand today, or how has their hand been weakened or strengthened since that point?
Well, the 2/3 was just after World War II. By 1971, they had a lot less because of the Vietnam War. They'd been printing and borrowing more than they had in gold. And a lot of the European countries redeemed their dollars for gold. And that's why they closed the gold window. As of today, officially, the United States has just over 8,100 metric tons, but there hasn't been an audit of that in decades. And a lot of people claim that a lot of that gold has been leased out many times over. And there's a lot of doubt as to whether there is that much gold in Fort Knox or even West Point, where they keep some of the gold. And like you said, though, the Chinese, they're accumulating a lot of gold, and their official reserves are actually probably really underestimated, maybe just like the Americans' reserves are overestimated. The Chinese official reserves are just over 2,200 metric tons, but many analysts in the gold sector have claimed that China has probably more like 30,000 metric tons.
Here's the thing for you, and this is just came into my head as you were saying about China's official reporting here. You know that game Monopoly? You know that board game Monopoly where they have all that fake money, right? Well, when I used to play Monopoly with my wife, she used to sort of cheat on me a little bit. She used to, when she got one of those $500 bills, she used to slide it to the side. So when I was looking at her cash pile, she actually had more than it appeared. She had what she called a secret stash there. So when I thought I was getting to the end game and I was going to wreck her and bankrupt her, she would produce this wad of 500s there and laugh at me and say, I had this on the side. Could that be effectively what China's doing? Because let's face it, why would China play its hand or show its hand at the minute? Why would they appear to be in a stronger position than they are? Why not appear to be vulnerable and then surprise the world with their excess gold? The opposite's true with America. They're maybe over exaggerating what they have because they don't want to appear weak.
Yeah, and China, I think the reason why they underplay how much gold they have is that they still have a lot of dollars, especially treasuries. And if they tell the world, we got this much gold, people it might spook the treasury market and make bonds in the US go down even more and interest rates go up. So they're trying to wean off, these treasury holdings, which they've been doing since 2021 slowly, and buying gold on the quiet. They are also the second biggest producer of gold in terms of gold mining, and all that production stays in China. So yeah, that's why. And the Americans, of course, many people don't like to admit it, especially in the West, Western economists and central bankers. But gold is the enemy of fiat currencies, and the major fiat currency is the dollar. So they have to pretend that gold isn't important. So they really never like to talk about gold. And yeah, when central bankers are asked about gold, for example, Ben Bernanke a few years ago, he was asked by Ron Paul in Congress what he thought gold was. And Ben Bernanke said, no, it's not money, it's just tradition. That's how much they're scared of gold and that's why when you said gold is making new highs, it's actually the dollar and all currencies that are making new lows versus gold, because there's no way out of this debt system but to issue even more debt to keep it going. And the more debt you issue, the more currency is out there. And it's just a simple law of supply and demand. The thing about gold that is difficult in terms of holding for the long term is that the powers that be, the mainstream media, financial press, they all denigrate gold. So a lot of people, they think it's just a barbarous relic. It's a commodity. It's very volatile, but it's anything but. So you got to be thick-skinned. You got to ignore all the noise and hold on to it, in my opinion.
Yeah, what we'll do is we've got to take a little headline break right now just for 30 seconds. When we come back at the other side, let's look at what lies ahead. Is it too late for America to backpedal to get to that previous position of gold strength, or has too much water gone under the bridge? Is it really going to be it's just a case of when the dollar completely collapses rather than if the dollar completely collapses? So let's look at possible scenarios in the short term well, obviously we're speculating about what could happen in the future, but it's a case of possibly when this will happen, not if this will happen. Another live stream that you did recently on your YouTube channel, Manco 64, Maneco 64, was titled "All Fiat Currencies Are on the Edge of the Precipice." So that sounds very dramatic. It sounds very doomsday-ish, but is it simply a reality? It's a statement of reality. You're not trying to be, dramatic, and you're not doing it for the clicks. You're just simply passing comment on what you can see happening right before your own two eyes.
Well, before I started my YouTube channel and when I was still working in the city of London, I had my own blog. It was called forsoundmoney.com. I kept it privately, not for work. And even back in '07, I was saying that all fiat currencies are going to sink because fiat currencies, if you look historically, they always go to zero. And why? Well, because governments abuse it because it's very easy to create with the help of the central bank. So um, there's an old quote, I think, from a Hemingway story that someone asked someone, how did you go bankrupt? And they said, gradually, and then all of a sudden, I went bankrupt.
Yes.
And that's the way I'm seeing things right now. And why? Well, because of the breakout in the gold price, and if you reverse that, it's like the breakdown of the fiat currencies. I think we are very much near the edge. And by that, I mean that fiat currencies are going to continue to go lower. I spoke this morning about, in my video, about the nationwide house price to gold ratio. And I noted that in 2004, you needed 670 ounces of gold to buy the average UK house price. But now you only need 138 ounces. So it just goes to show that it's not house prices that have gone up. It's just the pound that's going down versus real money, which I see as gold. And I mean, the day when you won't be able to buy any gold or silver, for example, with the currency of your country, that's when the system is up. If you go to countries like Zimbabwe or Venezuela or Argentina, you can't buy any gold with their local currencies. You still have to use the dollar. But one day, even the dollar is going to go the way of the peso or the Zimbabwe dollar or the Lebanese lira and all
Yeah.
those. And the pound's going to follow suit because all the major fiat currencies are a derivative of the dollar because of what happened at the Bretton Woods conference in 1944.
Let me ask you this question here for the benefit, maybe the people that are tuned in and they're listening to this conversation. And even I'm thinking this as we're having this conversation here. Let's assume what we're talking about happens, or as you say, it built up gradually and then it happened all of a sudden in terms of bankruptcy. So let's apply that to the UK. Let's apply it to Ireland or any European country. If it gets to that point, what will that mean for citizens on a day-to-day basis? People that are borrowing money, people that have money in the stock markets, people that have, property portfolios. How will it affect them at that point? Will it be a sudden effect, or will it be a gradual effect on, for example, people's, nest eggs, their savings pots, because people have money in different things, and what will be the scenario for people in that position?
Yeah, I mean, it's very difficult to say exactly, but if you look back at history, um, let's say Weimar Germany in the 1920s when their currency collapsed, people who had savings in that currency, the savings were destroyed. People who depend on the government, and here I'm thinking of pensioners, of their national pension. The government might still be able to pay your pension because they can print the money, but it
Yeah.
won't be buying much. And we're seeing that already. People are struggling to survive, even though the state pension has been rising. And in terms of investment, if you have investments in financial assets like insurance companies, banks, I think yeah, that will be will be more than decimated. It will become worthless. In Germany in the 20s, people who had, let's say, investments in real businesses like factories that had real assets, or even farmers did well, so it's very difficult to say, but houses, of course, are always going to be there, bricks and mortars. Debt, yes, debt is it's like a mixed thing, because if you're able to carry that debt in the run up to this crisis, you might actually end up doing quite well, because the debt is also extinguished when the currency collapses, because the other side of the debt is the currency. But you never know. The bankers and politicians, if we go on to a new system, let's say a CBDC, they might not let you off. So my strategy has always been to try to get out of debt as much as possible, not to take a chance, but you might end up doing okay. You know, it might actually wipe out your debt, but in the meantime, if interest rates keep rising, you might not be able to service that mortgage. One example, you know, I grew up in Brazil, and in the late 80s, they had a currency collapse. And I'll give you an example. One of my uncles, he had bought a property to have his medical practice in, and the day he exchanged on the property, he paid the seller, and the next day the currency collapsed and they brought a new currency. So my uncle was very fortunate because he got rid of the old currency just the day before that it became worthless. The seller of the property, on the other hand, he was left holding the bag. So there's
Yeah.
so many permutations, but I think here in the West, we're so used to bailouts and government helping. They're going to keep things going, but and you might get your money, you know, your pension and other stuff. The problem is that it's not going to be buying much. That's how I see things.
You know, it's great to hear your answer to that question. One thing that I picked up on in particular, just as we wrap this up, is you mentioned the elderly or people that are a little bit older. Traditionally, I think, just generalizing here, as people get older, their appetite for risk decreases. So you'll find a lot of retired folk who like to have a lump of money sitting on deposit in the bank, or they put it into these 1 or 2 year fixed rate bonds. And that tends to be the investment strategy for older people because, you know, they've worked all their life, they've accumulated, they don't want to risk, you know, derivatives or, you know, shorting on shares or anything like that. They just like to see their little bank statement and they like to know that their money's safe. Ironically, that could backfire spectacularly in the scenario that we're talking about, because people that do invest heavily in financial institutions or insurance companies, for example, or have massive amounts of money on deposit in the bank, they're the ones that are going to be burned most likely the worst. So if you're older, and you're listening to this today, you might want to rethink your investment strategies. If you have a good independent financial advisor, I'm sure they'll be able to give you some advice in this one, but don't just lump everything into the bank, given that I believe, Mario, the writing is on the wall when it comes to banking institutions and insurance type institutions at this point in time. So listen, we're up to time in this one. I could talk to you for about 5 hours of about 6 other subjects that I'd like to get into you, but we don't have time to do that. But I just want to thank you for taking your time out this morning, Mario, and speaking to us so openly. And frankly, follow Mario on his YouTube channel, Manco, Maneco 64. You'll get constant updates, live streams in there about all things financial. And whatever you're off to do now, Mario, I hope you have a very pleasant day and a very profitable day investing in whatever you're going to invest in today. So big thanks to you for that.
You're welcome, and thank you, Rick, for having me.